Hey Mobil Trades! I want to do a video analysis update on the S&P 500, the NASDAQ, as well as XLK, Apple, Microsoft, Nvidia, AMD, and Qualcomm, Micron, XLV, Boeing, Airline ETF, Jets, Exxon Mobil, Disney, AMC Theaters, and Tesla, Enphase Energy, NEO, ARK, ROKU, PayPal, Fastly, Palantir, Netflix, Amazon, Salesforce, Bitcoin, and Ethereum. So let's get right into it. We have a 1, 2, 3, 4, 5, wave 1 for SPY. Then we have an ABC correction where the length of wave A placed with wave B high is where wave C ended, possibly a wave 2 at the 50% fib. So the length of wave 1 placed at the wave 2 low could take SPY to 495, and until SPY is below 444 to 448. That's a pretty conservative claim to make. It's important to note that even if SPY and QQQ got to the 61.8 to 78.6% fib, we'd still just be looking for a wave 2 to end before more highs. But XLK has already broken the 1122 high. We have a lot of ETFs and supporting evidence that says we shouldn't be betting against the market right now, especially not the tech sector. It's always a possibility that we have more downside, but it's also a possibility that we have more upside, and I think that's the more likely possibility. We have an ABC correction. The length of wave A placed the wave B high again is where wave C ended. Then we have a 1, 2, 3, 4, 5 wave 1, and again another ABC correction where the length of wave A placed the wave B high is where wave C ended. So a lot of people think wave theory is silly. I think becoming a foreign real estate agent and then a doctor in the same quarter is silly. The length of wave 1 placed the wave 2 low says we could see people look silly becoming monetary policy experts now. The length of wave 1 placed the wave 2 low could take the NASDAQ QQQ to the 430s, and it's important to note again that even if we got between the 61.8 and 78.6% fib, that's still just a regular place for a wave 2 to end before more highs. So we're being very biased right now if we're saying that the most likely scenario from an Elliott wave perspective is that, we're going to crash. But we have an ABC correction. The length of wave A placed the wave B high is where wave C ended for XLK. It's always a possibility that the market can crash, right? That's not really the point of technical analysis, though. The point of technical analysis is to find the most likely possibility. I think XLK shows a melt up could certainly fit that description. This is a 1, 2, 3, 4, 5 wave 1 and an ABC correction where the length of wave A placed the wave B high is where wave C ended. So we have to trade the market as a whole. SPY's wave 2 ended at the 50% fib. QQQ's wave 2 ended at the 50% fib. This is most likely a short wave 2 for XLK. The length of wave 1 placed with wave 2 low could take it to 190. That lines up perfectly with the 161.8% extension of wave 1. It's important to note XLK holds 20% Microsoft, 20% Apple, and it just broke above the 1122 high. So it's probably a leading indicator right now of more highs for the market. So is Apple. Apple formed a wave 1 and a wave 2, but really the most important count right now for Apple is from this May low, likely another wave 1 and 2 formed because we passed the 161.8% fib and we passed the length of wave 1 placed the wave 2 low. So very likely this is a wave 3. So this wave 3 could still be in progress. That's certainly a possibility. Even if Apple had more downside in the short term, I think that a shallow wave 4 would be capped around 165. I wouldn't bet against Apple right now. And I think the moral of the story, is that even if we had more downside in the short term, a dip would likely be supported, and then the length of wave 1 placed with wave 4 low pretty conservatively would take Apple to 200. Very nice piece of evidence for tech bulls. Microsoft. If we look at the Microsoft count, it really helps us kind of rule out a lot of other counts on the larger degree. Microsoft passed the length of this rally from May to August placed at this low, right? So we can't really count this rally in October as a wave 5 for Microsoft. We also made a new high on the relative strength index within the cycle from this low. So that's a rule in Elliott wave theory. If we're in the same cycle, then wave 5 has to end with momentum divergence. The fact that this is a new high on the RSI and it's past the length of this rally placed at this low suggests that this is most likely another wave 1 and a wave 2 that ended. We have SPY at the 50% fib. We have QQQ at the 50% fib. Most likely Microsoft is going to go the length of wave 1 placed at the wave 2 low. Even if we're being very conservative and generous to the bears, we could say that keeping Microsoft above 306 is pretty reasonable. Definitely 314. The length of wave 1 placed at the wave 2 low says Microsoft could be heading into the 380s. So, we shouldn't rule out a crash, but we definitely shouldn't be ruling out a melt up right now. I think that a pretty safe claim to make is that anyone who says that Nvidia and AMD have definitively topped and that Tesla's definitively topped and so is Netflix, that they're making a very dangerous statement. Nvidia formed a wave 1 and a wave 2, and then within this cycle made a new high on the RSI. But really what matters is that Nvidia has gone past the 161.8% extension of this rally from March to September. So very likely this is a wave 3 that ended. Now we're putting in wave 4 at the 50% fib. So if we're being generous to the bears, we can say, hey, keep Nvidia above 254. And until then, the length of wave 1 placed at the wave 4 low could take Nvidia to a new high as the 380. So to be fair for me with Nvidia, I've been talking about it for a while, especially since this May low. And I've reiterated the bullishness on each of these dips. As recently as October, I said that Nvidia getting to 303 by the end of the summer was conservative, and ended up doing it by Thanksgiving. So, or I think it did it by Thanksgiving, but AMD is another piece of evidence that these semiconductor stocks probably aren't done. Even the leaders, this is a wave 1 and a wave 2, and most likely a wave 3 is in progress. So pretty conservatively, this is another wave 1 and another wave 2. I say that because we've gone past the 161.8% extension to end this wave 3. Then a wave 4 likely is being put in at the 50% fib. The length of wave 1 placed at the wave 4 low says pretty conservatively AMD is going to make a new high. Now, normally wave 5 doesn't make a marginal new high. And when we look at Qualcomm and Nvidia and kind of the semi sector and the tech sector holistically, I don't think that wave 5 is going to end at exactly 170. There's a possibility that the length of wave 5 will be the length of wave 3 in red placed at the wave 4 low. That could take AMD to the 190s, but until AMD's above or below 122 to 124, I pretty conservatively expect more highs, and the length of either wave 1 or wave 3 will take Nvidia and AMD to new highs together. So good evidence for the tech stocks, good evidence for the semiconductor stocks. Qualcomm and Apple, as recently as yesterday, made new all-time highs. So did, I believe, Pfizer got pretty close. Anyway, this is a wave 1 and a wave 2 for Qualcomm, and a huge wave 3 that passes the 161.8% extension of wave 1. We have a wave 4 that ends at the 38.2% fib. Qualcomm was another one being accumulated by large institutions on the bar chart straddle and strangle screener this summer. We have a huge breakout, and it proves that this stock has been being accumulated by large institutions. So, you know, the big boys were accumulating a lot of semiconductor stocks this summer. The length of wave 3 placed at the wave 4 low could take Qualcomm to 232. Great evidence for Qualcomm, great evidence for the rest of the market. Micron probably wasn't being left out of the picture. This is a wave 1 and a wave 2. Conservatively, this is another wave 3 and a wave 4, or this is another wave 1 and a wave 2 that ended at the 50% fib. Either way, when Micron goes the length of this rally placed at this low, that would be a good place for a hypothetical trader to take profits at 121. But I think that's conservative. I think this is a wave 1 and a wave 2 that ended at the 50% fib. But what's most important is that Micron, like Qualcomm, is probably going to break this high. It's probably going to do it on nice, strong volume and do the left side of the base, the right side of the base, confirm it was being accumulated by large institutions, and go hit an important equal legs target of 121, likely while Qualcomm rallies. Let's look at XLV right now. XLV on the smaller degree looked like it formed a small wave 1 and a wave 2. Then it broke this small wave 1 high above 135. But the larger degree is more important. It looks like XLV could follow Pfizer very soon and break the August high. That would be a wave 1 and a wave 2, a wave 3 that went past the 161.8% extension of wave 1, a wave 4 that ended between the 23.6 and 38.2% fib. So the length of wave 1 placed at the wave 4 low says XLV will make a new all-time high, possibly heading into the 160s. This is a very important chart. Yesterday, hopefully, sent that message to some people. If we see Boeing right now, Boeing and some of these value stocks could quietly receive some rotation in the market. I know I'm the boy who cried Boeing, but I give special treatment to monopolies, okay? I give special treatment to Pfizer and Disney and Boeing for myself personally, and Pfizer was the exact same way. We said Pfizer was a boring loser, even though it was a monopoly. Now they're saying the exact same thing about Boeing and Disney. We'll see how that plays out. I feel like it's going to be another one where it's obvious in hindsight. The classical traders say it looks great when it makes a new all-time high. I like to get in, during the discount phase. This is an ABC correction. I believe this ended a very important wave 2 low on the larger degree, but really the smaller degree is what's most important. I think this is another wave 1 and another wave 2. So within the cycle from the low of last year, in October, I believe we formed another wave 1 and another wave 2. So the pretty standard wave 2 stop is the 78.6% fib, and then the wave 2 invalidation is the beginning of wave 1, which is 141. So I think this is a wave 1 and a wave 2. Boeing, I think it's going to go to the 161.8% extension for a small degree. Wave 3 target of 363, have a shallow wave 4 correction and go on a wave 5 higher. The length of wave 1 placed the wave 4 low. Then says Boeing getting into the 400s could just be ending a wave 3. So yes, this could be a massive opportunity, not just in, one monopoly, but in an entire sector right now. and they make the best opportunities difficult, is it really the most likely possibility that the transportation sector will never be rotated into? I'm not sure I would be making that argument, especially for kind of the long-term outlook. This is a wave 1 and a wave 2 for jets. We can't call this a wave 3 and a wave 4 anymore. Most likely, with Boeing, this is an incredibly good opportunity that's being made incredibly difficult. I think this is another wave 1 and another wave 2 at the 61.8% fib. Pretty tight. Stop would be 18. A nice invalidation, especially as we get closer to it, is the beginning of wave 1, which is 15. This is a wave 1 and a wave 2. So the length of wave 1 places the wave 2 low could take the airline ETF jets to 33. I think we're going to see in the first quarter, definitely, in my opinion, in the second quarter, oil is going to have a big rally. And I think that the next time oil rallies, we're going to see the industrials and the transportation sector outperform above 18 to 15. You know, I think the transportation sector is very similar to the software sector, where it's a pretty big sector right now, and it wouldn't be too bad to get some exposure to it, in my unprofessional opinion. Because for the next couple of years, for the next couple of quarters, we could see those sectors hog money from the rest of the market. You know, sometimes being addicted to the alpha chase is not a good thing. This is a wave 1 and a wave 2, a huge wave 3, and a wave 4 that retests the wave 1 high that ends exactly at the 38.2% fib. The length of wave 1 on the smaller degree, placed at the wave 4 low, will conservatively take Exxon Mobil to 76. The length of wave 3, placed at the wave 4 low, could take more aggressively Exxon Mobil to 85. The only reason that I think that's a pretty likely target is because from this low of 52, we form another wave 1 and another wave 2. So above 55 to 52, the small degree wave 3 could take Exxon Mobil to 75 before a shallow wave 4 and a wave 5 higher. So that is where the idea that, you know, the mid 80s could be a possible target for Exxon Mobil. I think it looks pretty good. Let's look at Disney right now. It's another one where we probably shouldn't be falling asleep on the reopening sector or the streaming sector. This is a 1, 2, 3, 4, 5 wave 1 for Disney, and an ABC a wave 2. The length of wave A placed at the wave B high is where wave C ended at the 50% fib. So the length of wave 1 placed at the wave 2 low could take Disney to 266. I think Disney and Boeing will be quite similar to Pfizer, where they're going to feel obvious in hindsight, right? They're going to look, you know, great when they're having base breakouts above this wave 1 high, but until then, you know, they're weak losers. The length of wave 1 placed at the wave 2 low says, you know, it might be a good idea for non-existent traders to get exposure to Disney, especially if it's above 126. That's a pretty safe claim to make. I don't think this gap gets filled. I think this will be an unfilled gap. The length of wave 1 placed at the wave 2 low says pretty conservatively we could see 266 probably in Q2 or Q3. I wouldn't be betting against Disney. I think it's going to be a base breakout. It's important to note for AMC Theaters, one, that I'm trading it with the reopening sector. Two, it has lost a low to trade against. But three, and most importantly, the options market is a big piece of my analysis right now. And if you've been looking at the bar chart straddle and strangle screener, you'll know why. But just for a refresher, why we use the bar chart straddle and strangle screener so much is because as recently as October 29th of 2020, we saw Tesla, Boeing, Micron, and Intel make multiple appearances before they exploded. So then I started really paying attention to the sector. And again, in December of 2020, look at this. I mean, if your best friend said, hey, keep a close eye on Home Depot, Lowe's, Citibank, JP Morgan, Lowe's again, Royal Caribbean, Nvidia, and Microsoft in, December of 2020, I don't know about you, but that would be my best friend. So the bar chart straddle and strangle screener, look at it this summer, right? What have you done for me lately as recently as August? Netflix, Tesla, Apple, right? You heard of these stocks. They were all over the bar chart straddle and strangle screener. It doesn't always happen right away, right? Home Depot, they had a shakeout. Nvidia, they had a shakeout, but they were being accumulated and then they did explode. They don't always happen overnight. But AMC, look at this. It was all over this screener at 10, and I was wondering, is the move going to be to the downside? We know which way the move was, and AMC has been all over the bar chart straddle and strangle screener. It doesn't always happen overnight. But if you pay attention to the screener, you'll see why I use it so much in my analysis. AMC has taken up every single slot on the bar chart straddle and strangle screener with a lot of other meme stocks like GameStop, like Nokia, like BlackBerry. And since we're in a pretty precarious situation in the market, I didn't want to spend a lot of time talking about meme stocks in this video, but they are probably going to sneak up on us as the market. And let's just kind of look at the history of AMC when it was on the bar chart straddle and strangle screener. It was a very similar situation. We were making fun of all the Redditors who had, caught a pop and were looking for more upside. I think right now, if we look at AMC, this could really sneak up on us. Now, we don't have a low to trade against. So personally, it's very risky, but this is most likely a wave 1 and a wave 2. We're forming a nice wick on the weekly between the 61.8 and 78.6% fib. We got Disney, we got Boeing, we have oil, we have the airline ETF jets, and basically most of the stock market that says we could see some fireworks, and I wouldn't be surprised if we saw the meme stocks explode again in the first quarter. Right now, there's a lot of evidence that this is a wave 1. I think a big piece of evidence that this definitely isn't a wave 5 made a new high on the weekly RSI. We could be ending a wave 2 between the 61.8 and 78.6% fib. If we're above 17, I expect that we are going to go fill out this base, break this high, and AMC is going to make us talk about it a lot. And I think it's going to be a big distraction, but I think it's going to happen. I wouldn't be betting against AMC or GameStop. They don't really have lows to trade against, so they're quite dangerous. I think especially for AMC though, the 78.6% fib, would line up nicely with this high right here of 20, above 17 to 20. We could see buyers fill out the left side of the base, right side of the base, and then AMC could let us know why the institutions have been accumulating so many options on it. I think it's a very similar reason they were doing it when AMC was at 10 in May and June. So just wanted to say that. Let's talk about Tesla, another stock that we should really be thanking the bar chart straddle and strangle screener a lot for. Multiple times, multiple appearances on that screener preceded huge news events, right? So that's something to think about. Wave 1, wave 2, huge wave 3, and wave 4 conservatively for Tesla. I think this is on the smaller degree the most important count. Wave 1, wave 2, wave 3, and wave 4 ending right now, right between the 38.2 to 50% fib. So I've gone over why going below 895 wouldn't invalidate the bigger bullish thesis, but it would invalidate the idea that Tesla is ending a wave 4. Tesla could form another wave 1 and another wave 2 if it went into the 800 to 700 range, but I don't think it will. I think that Tesla is going to end up ending a wave 4 correction. I don't think it will go below the 61.8% retracement of 813. I honestly don't think it will go below 895, but the wave 4 invalidation, because it could be a wave 2, is 813. And if we look right now, this could be an ABC correction ending a wave 4, the length of wave A, place of the wave B high. It sounds silly until the NASDAQ melts up to 400 is likely where a wave 4 is ending. I don't think Tesla's wave 5 is going to be the length of wave 1 place at the wave 4 low, because Tesla would not make a new all-time high. This deeper correction most likely is going to lead to a wave 5 that is the length of wave 3 place at the wave 4 low. I think the next time Tesla rallies, it's going to go past what I have called the conservative wave 5 target of 1368. And when it does that, it will confirm a larger degree count that says Tesla is not within a big wave 5. It formed another wave 1 and another wave 2, and this view will be confirmed if Tesla goes into, say, the 1400s, that this is another wave 1 and another wave 2. That means the length of this rally placed at this low says 1368 is a minimum wave 3 target. We'd have a shallow wave 4 correction and a wave 5 higher. I think even within this cycle right now, if Tesla's wave 5 is the length of wave 3 placed at the wave 4 low, and Tesla does not go below 813, more tight, 895, but I think 813, especially for a wave 4, is a nice, place to not be calling for a wave 4 to end. Then wave 5 could be the length of wave 3, placed at the wave 4 low. Tesla could go to the 1600s in Q1 or Q2, but 1368 is going to continue to be the conservative target until it gets into the 1400s. Enphase Energy is loads of evidence right now that we shouldn't be betting against clean energy. We shouldn't be betting against Tesla or NIO. The length of wave 1 placed at the wave 2 low has already been passed. We passed the 161.8% extension. So this is an extremely conservative count that says this is a wave 3 and a wave 4. The length of wave 3 placed at the wave 4 low will take Enphase Energy on a new high to 334. What's more likely for Enphase Energy is that is not a wave 3 or a wave 4. So I wait to have all the evidence, but I think we've got a lot of it, that this is, yes, a 1-2-1-2 Elliott wave nest. This is another wave 2 that is ending at the 61.8% fib. I think Enphase Energy is a lot of evidence. We're going to see more highs in the clean energy sector. We have a wave 1 and a wave 2 ending at the 61.8% retracement. So above the 78.6% fib of 173, the length of this rally placed at this low says that a minimum wave 3 target could take Enphase Energy into the 330s. That is looking very good. I predicted this entire move before it happened. It's playing out very well. We passed the 161.8% extension. This is definitely not a wave 5. I think it's another wave 1 and another wave 2. will make more highs for Enphase Energy, will probably make more highs for Tesla and NIO during that time. NIO right now is a little dangerous because we don't have a low to trade against, but we have a nice fib to trade against, which is the 61.8% retracement. I think this is a 1, 2, 3, 4, 5 wave 1 and a wave 2 that is ending between the 50 to 61.8% retracement. So a pretty tight stop right now is 26. If we went below 26, then the bears would be right that this is an ABC correction where the length of wave A placed at the wave B high is where wave C is going to end. So the bears right now think that they've got a clean short on NIO to 20. Okay, I don't think that's going to happen, but it's important to know that even if it did, that's most likely where a wave 2 would end before a pretty insane opportunity, especially when we look at XPEV, we look at Li Auto doing extremely well. I don't think we should be betting against NIO. I don't think that NIO will go to 20. I think most likely it will end a wave 2 correction between the 50 to 61.8% retracement. I think Enphase Energy, I think Tesla, I think a lot of clean energy names are evidence that we're going to see more highs in this sector in the next time clean energy rallies. NIO will not be left out. I think this is the left side of the base. We're going to go fill out the right side of the base, and then it's going to look really pretty in the 70s. But until then, the length of wave 1 placed with the wave 2 low says a minimum wave 3 target could be 95 in the longer term cycles. That would just be a wave 3. And now NIO is below the 50% retracement. So we're starting to really get a lot of evidence that this is not a wave 3 or a wave 4. This is another wave 1 and a wave 2 above the 61.8% retracement of 26. I love the risk reward that will go break above this high and possibly be heading into the 90s in the longer term cycles. NIO looks great. I think it's going to rally with Tesla. Let's look at ARK right now. Remember, Tesla's a pretty big holding of ARK. If it's got more upside, I think, again, we're not going to see ARK be left out of the next time Tesla rallies. This is a wave 1 and a wave 2. We've gone past the 50% retracement. We are starting to rule out that this is another, that this is a wave 3 and a wave 4. I think most likely this is another wave 1 and another wave 2. If we're above the 61.8% retracement of 81, that's a pretty tight stop. The length of wave 1 placed with wave 2 low says it's a pretty nice stop. And we could go on a wave 3 higher to 208. I think ARK will fill out the left side of the base, the right side of the base, and it's going to get kind of the January effect in 2022. Software could be a very important sector to be exposed to. I think clean energy has proven we shouldn't be betting against growth. There were a lot of leaders in the software sector this summer, like Netflix, like Salesforce, like Datadog, like Cloudflare, like Unity Software. I think there's a lot of laggards now in the software sector that could be opportunities. I think this is a wave 1 and a wave 2. If we're above 81, with the invalidation being 60, I think ARK is the length of wave 1 placed with wave 2 low going to go into the 200s, and that would just be a minimum wave 3 target. This will end up being the left side of the base. We'll fill out the right side of the base, and it's going to look really pretty in the 160s. Let's look at ROKU right now. ROKU is between the 61.8 to 78.6% fib. It got hit a little after hours. It looks like it recovered. I thought that the news about ROKU was interesting. I don't trade the headlines, but a partnership with Google, it just kind of sets the stage. We could be seeing some very nice opportunities in the software sector. And it's not just one software stock. It's numerous software stocks. I think ROKU and even Disney are evidence that the streaming sector is not done. Netflix, I'm about to show a setup on that shows we shouldn't be betting against streaming, but I think software in general could get a lot of money flown into it. This is a 1, 2, 3, 4, 5 wave 1 and an ABC correction ending wave 2. We're at the 61.8% retracement. I think that the small degree wave 1 high of 176 will be very hard for ROKU to get below. So that's a pretty nice level. The length of wave 1 placed with wave 2 low says until ROKU is below 176, we could definitely see a reaction in a wave 2 at the 61.8% retracement. This is a big bear trap, shaking out all the retail traders, including yours truly, who had a stop right here at 272. I don't think that ROKU is going to stay below 272 for long. I think this is that Wyckoff selling climax. Get every margin trader out, get every retail trader stop before it explodes. This is a wave 1 high being retested. I don't think it gets broken. I think ROKU holds above 173, fills out the right side of the base, and this is going to end up being a huge opportunity. The length of wave 1 placed at the wave 2 low says that the Google partnership may be foreshadowing Google potential in ROKU. A minimum wave 3 target in the long term could be the 660s, and that's just where a wave 3 would end. We have a shallow wave 4 and a wave 5 higher. There's a lot of names that are possibly monopolies in the software sector, in the e-commerce sector, that say, wait a minute, I'm not sure all of these are most likely going to crash. I don't think the bubble is done popping. I think this is a wave 1 and a wave 2, and now we're below the 50% retracement for PayPal. That means most likely to me, this is not a wave 3 or a wave 4. This is another wave 1 and a wave 2. The length of wave 1 placed at the wave 2 low says this could be close to a monopoly, certainly an industry leader. There's a nice opportunity right now. The length of wave 1 placed at the wave 2 low could take PayPal to a new all-time high of 400 for a minimum wave 3 target. It's almost identical to ARK, but it's a very similar theme that we see in the e-cash, the e-commerce sector. The length of wave 1 placed at the wave 2 low says that the next time Amazon, explodes, it's going to take a lot of e-commerce and e-cash stocks with it. Between the 50 to 61.8% fib, I think that PayPal will hold above 169 and go. The length of wave 1 placed at the wave 2 low. A wider invalidation would be 130, which lines up with this wave 1 high. I think 130 is a little wide. I want to see PayPal above 169, which lines up with this low of 171. Until then, the length of wave 1 placed at the wave 2 low may end a big wave 2. PayPal could be heading into the 400s in the longer term cycles to end a conservative wave 3 before a shallow wave 4 and a wave 5 higher. So the bigger the opportunity, the more difficult it's going to be. They're not going to make any of these easy. If we look at Fastly right now, it was the stock of the year, right? Fastly and Datadog, they move step for step together. They sell off together. And then I think Datadog just ended up being the leader. I think a very similar phenomenon is going on with Unity Software and Palantir right now. But I think Fastly is a 1, 2, 3, 4, 5 wave 1 and an ABC correction wave 2 ending at the 78.6% fib. The length of wave 1 placed at the wave 2 low. We don't have a low to trade against. So that's kind of the problem with Fastly. I still think 33 is a nice level to stay above. It lines up nicely with kind of the small degree wave 1 high of 35. I think that for a risk management level, Fastly has to be above 33, but the length of wave 1 placed at the wave 2 low says position size may be the best way to go because there is a bunch of upside right now, and we could see a conservative wave 3 target in the future where Fastly follows Datadog, breaks above that wave 1 high, confirms the left side of the base, the right side of the base, and then it's gone. We could see a lot of software stocks, especially the recent IPOs, do this. So 33 is a nice level to stay above. The real invalidation is the beginning of wave 1, which is way too wide of 10. Fastly needs to be traded with the holistic view of the software sector, which I believe looks very good. If we look at Palantir right now, it's another recent IPO. Before we look at Palantir, let's just look at Unity Software real quick, because they looked identical, and it's a very similar thing with Datadog. It's a very similar thing with Fastly and Datadog. I think Palantir and Unity Software is the same phenomenon where this was the leader. But until this high was broken, we knew that Unity Software and Palantir moved together. They certainly did move together. In 2020, during this rally, they sold off together to end wave 2. I think Unity Software is leading Palantir right now with this new high. Conservatively, this is a wave 3 and a wave 4 ending between the 50 to 61.8% fib. I think there's a good likelihood, especially when we look at Salesforce and Netflix, software stocks that led this summer are going to make new highs, but the next time they rally, they're going to take the laggards with it. I think that we are going to see new highs in Palantir. We are going to see new highs in Unity Software. I think Unity Software is a leading indicator for Palantir, and I think Datadog was a leading indicator for Fastly, that these could be huge opportunities. And since we are so close to the 78.6% fib, they need to be traded with the holistic view of the software sector. I think this is a wave 1 and a wave 2 for Palantir. We're getting very close to 17. 17 is also the 78.6% retracement. So I need to see Palantir above this level for risk management. But other than that, I think position size would be the best way to go. The length of wave 1 placed at the wave 2 low says that there's a good chance in the future Palantir will break above this wave 1 high, confirm an IPO base, and go follow Unity Software. Go follow some explosive stocks in the software sector. We have TWLO, we have Okta giving us very nice levels. So since Palantir is so close to 17, I think right now a really important chart for software stocks in general, besides TWLO and Okta, which I cover very frequently, is going to be PSJ. PSJ forms a wave 1 and a wave 2, has another wave 1 and a wave 2 that is ending at the 50% fib. So I think a nice kind of stop, a pretty tight stop for software in general, is seeing PSJ above the 61.8% fib of 115. That lines up with this wave 1 high of 107. That'd be a little wider. And I think the length of wave 1 placed at the wave 2 low is going to take PSJ to 247. I think that could certainly happen in 2022, even the summer of 2022, where we see all the software stocks as a group get the January effect, confirm, like a lot of leaders already have, that they were being accumulated in 2021 and that this sector is ready to go. I think we hold above 115. I think PSJ makes a new high, and I think with a lot of software stocks near the 78.6% retracement, the chart of ARK and the charts of PSJ are very important. We have holistic evidence right now from a lot of software names. I think Netflix is one of them that we're going to make new highs. I think this is a wave 1 and a wave 2 for Netflix. I predict every dollar of this huge wave 3. Now we're ending wave 4 at the 50% fib. Conservatively, Netflix will make a new high within a wave 5 that is the length of wave 1, placed at the wave 4 low. That could take Netflix to the 720 range. I don't think that's where a wave 5 would end realistically. I think more realistically, Netflix's wave 5 will be the length of wave 3 placed at the wave 4 low. So the 78.6% fib is 524. A really tight stop would be 562. And I think there's a good chance that Netflix will end a wave 4 that's retesting this wave 1 high and go on another wave 5 higher as high as the 810 range. So I think Netflix looks really good. I think it was a leader in the streaming sector. We look at Amazon right now. Very pretty chart. Very pretty chart. Amazon, the most important chart, probably is the bigger picture, but I'm going to focus on the short-term view right now. That says just within the cycle from the August low, this is a wave 1 and a wave 2. This is likely another wave 1 and a wave 2 ending between the 61.8 and 78.6% retracement. Pretty tight right now is 3,300, but the invalidation, a pretty nice invalidation, is 3,176. If Amazon is above those levels, I expect this is a wave 1 and a wave 2, and Amazon is going to lead an e-commerce explosion in 2022. The length of wave 1 placed at the wave 2 low says it could be early in the 2022 that we go on a wave 3 higher to 3,900. That's a conservative wave 3 target. We'd have a shallow wave 4 before a wave 5 higher. All in all, just within the cycle from August, Amazon could be going to the 4,300 range, could be going much further than that. Let's look at Salesforce right now. I think Salesforce is a great chart. This is a wave 1 and a wave 2, a huge wave 3, and a wave 4 that ended at the 38.2 to 50% retracement. I think this is another wave 1 and another wave 2, ending between the 50 to 61.8% retracement. So if Salesforce is above 225 with 201 invalidating the length of wave 1 placed at the wave 2 low, says in Q2, more conservatively Q3, a pretty standard wave 3 target is 360 before a shallow wave 4 and a wave 5 higher. Salesforce was a big leading indicator for the software stocks. It's another one where we said, oh, it's too boring, right? It's a loser, but it was being accumulated by large institutions this entire time. It's proven that. I think this is a wave 1 and a wave 2. The length of wave 1 placed at the wave 2 low says Salesforce is going to 360. I think it's going to bring a lot of leaders and laggards with it. Salesforce looks great. It's a large cap. It's a big holding of a lot of software ETFs. Bitcoin and Ethereum right now are in pretty interesting spots. This is a wave 1 and a wave 2 for Bitcoin that ends between the 50 to 61.8% fib. I think this is another wave 1 and another wave 2 at the 78.6% retracement. So I think that right now, a very aggressive view, but a very accurate view is that Bitcoin is going to hold above the wave 1 low of 39.7K, go the length of wave 1 placed at the wave 2 low, and Bitcoin's path to not only 74,000, but also even 90,000, 100,000 could be right in front of us. If this is a wave 1 and a wave 2, the length of wave 1 placed at the wave 2 low could take Bitcoin to 74K before a shallow wave 4 and a wave 5 higher. The length of wave 1 placed at the wave 4 low could take Bitcoin to 97K. Ethereum right now is a beautiful view of crypto. It's pretty far from invalidating anything we see on Bitcoin. Obviously, Bitcoin and Ethereum are going to move together. I think there's kind of the writing on the wall. Ethereum is about to start to outperform Bitcoin by a lot. This is a wave 1 and a wave 2. I think this is another wave 1 in an ABC correction where the length of wave A placed with wave B high is where wave C ends. So very tight would be 3.5K. I think a more realistic stop is 3,129 with 2,657 invalidating. I think Ethereum holds all those levels, goes the length of wave 1 placed with wave 2 low, and the flippening will just be getting started at 5.8K.